Righto, money miners. Another week of Money of Mine's marketing strategy still available to everyone. Give MMS a contract and you get your project displayed in the intro. Like, far out. Like, get rid of investor relations. We're doing it for you. How easy is that? And it's just the smart move to give MMS the open pick contract.
Yeah, it doubles as a marketing strategy and just the smart thing to do.
It's pretty much a free bonus. Free bonus. Boys, how are we today?
Very well.
Very good, mate. I saw your message come through this morning. You said you'd done a bit of thinking on what to kind of talk about and hope there wasn't any big news. And then MinRes never ceases to disappoint us. So I think we've got a bit to chat about.
Yeah, that was in circulation already. So there's a big AFR article. Trav's going to go through all that. I'm just going to rip through a couple of quarters from last week, Ora Banda Evos that we missed because they were non-show days. Didn't get time for Genesis. Bit of Bellevue today. JD, what do you got?
I'm going to chat about the sort of strategy shift that we might be seeing from Rio and BHP, as well as to sort of wind through some of the higher grade stuff. A bit of an interesting rabbit hole of falling down, mate.
Yes, righto. Trav, mate, the AFR article coming out about end of last week about, mate, I tell you what, long, detailed, like this wasn't a 2-day jobby. Mate, take us into what is actually going on here in the world of MinRes.
A lot. The story just keeps getting juicier and better. I remember saying, like, I don't know, about a couple of months ago, just that MinRes is the most fascinating corporate story of our, I think, generation at the time. At that time, and it just keeps delivering more and more juice, goss, excitement.
It's like an infinite orange.
What's happened here is Neil Chenoweth has written an investigative piece on MinRes's founder, Chris Ellison, and some former top executives at the company. Neil is a proper investigative journo. Like, we're talking multiple Walkley Awards. Like, when Neil writes an expose or an investigative piece, like you pay attention. There's implications. There's, big things happening here. He's done heaps of work. This is a pretty well respected journo. And his article basically reads like a stunning expose of some questionable use of corporate funds going way back, which at a minimum could be described as the tax evasion scheme, and a more damning interpretation of the events could be something a fair bit worse than that. And while we generally like to steer clear of some of the more gossipy type of corporate Australia stories from the podcast, I think I've got to make the case of why this actually really matters to the money miners, to our audience, and everything like that. Because all I've got to do is just play this spark replay of MinRes on Open today, down 13%. More than $1.1 billion of market cap value, kind of gone on Open, and it's in. I think that's a response. Today's an update on the market. That's in response to the implications of what this investigative piece, has on people's perceptions of MinRes and its leadership and its governance.
It's funny when you talk about mate, the mining community, and it was probably around that similar period. The history of tax evasion schemes. For like people that just worked in the industry, there was all the tea tree scheme where a lot of miners put into this thing that was essentially these schemes where you avoided tax, and a lot of them had to pay it all back. Like it was rife back in the day. I'm not sure if it was around this time, and these were workers.
Oh, jeez.
Yeah, so it's
I don't know anything about that. Yeah.
Yeah, and it's like, it got uncovered eventually, but it was all the greatest thing ever.
Wow.
When they were doing it.
Yeah.
But it just catches up with you. Yeah.
So Trav, what did Neil get into? What are the allegations that sort of put forward? And obviously MinRes came and made a statement today. Why don't we start there?
Look, Neil's article alleges that Chris Ellison was involved in a tax evasion scheme from 2003 to 2014 using a company named Far East Equipment Holdings based in the British Virgin Islands. This scheme involved buying machinery with MinRes's shareholder funds and then selling it back to MinRes at inflated prices, creating unreported profits. Far East was 51% owned by Chris Ellison, while 4 other execs had varying minority interests in that British Virgin Islands company. Chris himself apparently received an ATO audit notice in August 2007, shortly after MinRes went public in 2006, and despite the audit, Ellison didn't disclose the extent of the dealings with Far East. In 2019, Ellison attempted to negotiate a deal with the ATO to disclose the scheme voluntarily in exchange for reduced penalties and no referral to other law enforcement regulatory bodies. The ATO identified behaviour amounting to evasion for several income years, with undisclosed income from this scheme reaching around $13 million. And to be clear, what's going on here is this is like a transfer pricing scheme. MinRes' staff apparently would buy machinery, equipment, but it would later show up that it was actually Far East Equipment Holdings that was buying the equipment. Far East, they would then sell these crushers or ball mills or batching plants, etc., to MinRes companies for sometimes multiples of the original cost, and MinRes would then use the inflated purchase price to claim depreciation in its tax returns. Where it gets worse, one of the beneficiaries of the scheme was Peter Wade, who was he was actually MD of MinRes at the time of the IPO, but he was importantly he was chairman of MinRes from 2008 until March 2022. He reaped 10% of the gains from the scheme, which was about $663,000 himself. And on the Far East sort of side of the ledger, the profits were not taxed in the sense that we have corporate profits taxed in Australia because it's a British Islands company, but they appear to be in some way distributed to the owners or beneficiaries in a peculiar way. And the crux of the writing is that this income was not sort of declared as taxable income to the ATO as in the way it should have been. And I want to read one sort of sentence specifically to sort of spell out the type of thing that we're talking about here. In another example, a MinRes subsidiary bought a used crusher in 2004 for $250,000, which was stockpiled in the Philippines. But the paperwork showed that it was actually acquired by Far East, which in 2008 sold the crusher to MinRes for $2 million for a project that was not in existence at the time of the IPO.
Jesus, right. So on the back of all this, Trav, MinRes have put out an announcement today, addressing the media statement.
Mm-hmm.
What did it say?
I think the response of the board is interesting to digest. It's a statement from James McClements, who is the chair of the board. What I find interesting is the statement is kind of quick to characterise the payments in question as being adequately disclosed as liabilities in the IPO prospectus. It frames the issue at hand mostly as a personal tax matter of Chris's, which he, in quotation marks, profoundly regrets his errors of judgment, and it reaffirms the board's support of Chris in his leadership of the company.
And they've engaged independent lawyers for this matter. But is that I assume that is for the MinRes side, not for his personal side.
Correct.
That's how I interpret that.
They've talked about it and having having independent lawyers investigate. There's in the series of articles written by Neil, there's like a lot of instances where he draws the string that there are these conflicts of interest that appear in what are supposed to be independent sort of advisors throughout its history. And, particularly it's he points at RSM as having conflicts advising both Chris on a personal matter, but also being the independent auditor on the audit committee at times. But there's a lot going on here, which I think when you see 13% of the share price come off today on, quote unquote, no news from the company that relates to the business operations of the company, there's a bit more of a read through.
Yeah. What do you make of the timing, mate?
I think it's spectacular in a lot of ways, not just because of the wild ride MinRes has been having as a company in a volatile environment, but we're extremely close to MinRes' next AGM. In fact, the notice of meeting went out today. So did the company's corporate governance statement. Ironically, I think we're in for one hell of an AGM at Osborne Park this year. I'll be interested to see if the proxy advisors actually recommend voting against on any of the resolutions, given the sort of the spotlight on the governance at the moment. But this is this expose doesn't come in a vacuum this year. I feel like this is the fourth independent instance of a pretty damning, governance issue at the company in the last 12 months that I can think of. This board should be under tremendous pressure, but they're probably not.
There's so many the moving parts and permutations of this. I think permutations is another word I use a lot, which seems flash, but the individual, like the part of this story, like being, it's not just a managing director or a chairman, it's the founding shareholder of the business, which has effect on all this. The time that this can take, these investigations and whatever may come of these investigations could be years, who knows? But what is going to happen in, I guess, the short, medium, and long term can go. So it's just going to be fascinating to follow. That's like as you reading that AFR article, you cannot go into any more detail or go into anything else because it was like it covered everything. It was long.
Yeah,
and it was like obviously months and months and maybe years of work to
totally
put that together. So it's I don't know what to. Yeah, it's got your eyes peeled to see what happens next. There are so many different ways this could go.
Yeah, I think it's worth like kind of just pointing out that like I can't think of a single instance in history where is the board ever advocated for anything other than what Chris wants. Like I think I don't know of any instance where that's happened. So I think it's a real equation for the media, for shareholders, for the board to sort of think, are there real question marks over the governance of this company? I think I'm not sort of speaking in a vacuum here. Like you've had articles this year about nepotism at the company, about undisclosed personal interests in relation to family involvements, conflicts of the company's own securities trading policy in relation to the Cali Metals IPO, question marks that ownership matters actually raised in relation to board potential conflicts of interest too. So like if it wasn't Chris Ellison and wasn't MinRes, something would have happened by now, but it is Chris Ellison and it is MinRes.
Yeah. Mate, you can't buy power.
You can.
Oh, yeah. Yeah, you can.
Yeah, I think how you've laid it out, and obviously the work that Neil has done there, it in simple terms just doesn't pass the pub test, right?
No.
That stuff just stinks. And yeah, I'm fascinated to see what Chris, the company, their lawyers and independent accountants come out with and how they go about explaining this sort of behavior, and more importantly, what the sort of punishment that is handed down will ultimately look like.
And a shareholder might even interpret the sell-off today as like an interpretation of some risk that, like Chris will no longer be leading the company and everyone wants Chris to be leading the company because of track record, blah, blah, blah. So, like it's not as straightforward as,
the possibility of that could have been the reason for the sell-off.
Yeah, totally, yeah, 100%. Or it could be a read-through about, other things like, And one last thing on MinRes, ding, ding, ding for Ali GC. Ali, how do you feel as a shareholder?
Ali GC ETF.
She doesn't know how to feel anymore.
Is that just the ETF in general, GC? WAF's coming back. You're all good. Right, let's anyway, we'll keep you posted on any more developments, buddy, on that one. Right, next up, let's do a bit of a Goldie quarterly rip through and a bit of copper, because Goldies are becoming copperish now. Start with Evolution, come out last Wednesday. Market appeared to like their quarterly, finishing up around 7% for the day. So gold and copper production, 193,500 ounces and 19 and a bit thousand tonnes respectively. Group cash flow, $108. So it was a 20% increase in their cash balance to $484, so up from $403. But they only added 81 because they didn't include $21 worth of stamp duty for the Mungari acquisition from 2021. So remember back at last week talking about time it takes to pay stamp duty. That's an example of it. And then $7 million for someone else. There's a bit of a theme in these quarterlies talking about group cash flow, but then there's a bit of shit after it. So just like what it start at, what it end at. So reduction in gearing continued. So ending the quarter at 23.9%, down from 25.4%. So the gross debt is a bit over 1.8 billion, and the net debt reduced to 1.345 billion. But no debt was actually paid off. So just the addition of a bit of free cash flow is what has reduced that gearing. So gearing refers to the total debt divided by the book value of the equity. So for the financial people out there.
Did you Google that or did you chat?
100% Googled that. So I assume that book value is based on the latest financials that we So now Red Lake, their North American asset. So it produced a bit over 37,000 ounces of gold and generated record quarterly operating and net mine cash flow of 67 million and 27 million. So 27 million net mine cash flow. So now I'll go into them.
Have we ever seen it make money before?
Oh God, I've got that coming up, Trav. So they're on track to deliver their 710 to 780,000 ounces of gold and 70 to 80,000 tonnes of copper. So now Cal, God, if you could you'd spin this out into a company by itself. Fuck. Adding $125 worth of net mine cash flow. So that was 73% of the group's mine cash flow come from the Cal mine alone. So, and as we said, Red Lake appeared to make money. So it says they added $27 of mine cash flow. So that's not including pretty much everything above and beyond that for the corporate side and everything. It's because they obviously got a lot of spread it across a lot of assets. But look, they lost 25 mil mine cash flow last quarter. That was after they spent $41 on growth capital for obviously mine development and tailings infrastructure, which maybe have fed into this quarter. But look, March quarter lost 30 mil loss for Jan quarter, 30 million September quarter, June quarter, September quarter last year, June quarter 2023, 69 million loss, and it just keeps bloody going. So you could say well overdue for some mine-free cash flow, but a lot to make up for historically. So, and the hit came from, it looks like processing, pretty much processing at a 1 million tonne per annum run rate now. Process grade lifted to above 5 grams, and so did the recoveries. So, but let's not forget an extra $391 per ounce of realised sales price. So that extra $391 per ounce is worth $14 for the ounces they produce. So previous quarter, they would have made $8 million mine-free cash flow. So something to keep in mind at the moment at these prices of what is a good mine and what is a marginal mine. So don't forget what the gold price is.
Gold price just doing wonders.
Makes everything look good.
It does.
Gold price, who would have thought? North Parkes was pretty flat month-on-month for copper production with a bit over 7,000 tonne. So it's sort of their second consecutive quarter down. But, their total copper production across North Parkes and Ernest Henry are near the upper end of the copper guidance. So it seems all tracking along with what they've actually guided. It says they lost 2 mil on net mine cash flow for North Parkes, but they pointed to concentrate shipments that are going out next quarter that they've already got ready to go. So I guess overall, where do Evos look like they're heading? Just looking at the Canaccord model, it says they're saying they're heading towards sort of like trying to get that gearing ratio down to about 15% by December 2025. And look, their comments were predicting that they see them having like enough of a bank balance to easily cover all the sustaining and short-term and long-term growth capex, 100 mil of debt repayment, 200 mil worth of divvies, and still have maybe circa sort of $500 million in surplus cash flow for either, special divvy buyback, M&A. So still, because they've still got that $525 revolver that's undrawn, they could get friggin' debt or bloody equity wherever they want for any friggin' big M&A they want to do. So essentially they got friggin' options galore when you're that size. So, but it appears they're, building towards a point to get that leverage down a bit.
Yeah, there's on the M&A front with them, it's rare to see Evolution go it's been nearly 12 months without seeing them do a deal, and that's pretty damn rare for Evolution. Like normally, normally you see them do 2 deals a year. That's how if it's not selling something, if it's not buying something, it's selling something. But they've just been quiet on the activity front, probably trying to get back in sort of favour with the market by delivering operationally. The commodity tailwinds have been pretty damn helpful as the share price has rebounded really strongly. But I wouldn't be surprised to see them getting active again. It's just in their nature.
Yeah, and because they've got $1 billion worth of liquidity at the moment, and then that's just not including what they're going to bring in the future quarters and the. Yeah. So they're not short of firepower, that's for sure. And they could raise fucking that much equity if they wanted to.
I do think the market was pretty keen after the North Parks acquisition, just to see them go a little period and pull that net debt balance back in check, make sure everything's all tickety boo, and just bed things down a bit before they go and spend or sell again. Selling would be obviously sort of fine and rejig things as the portfolio changes over time, but more on the buying front, I think a few quarters of cash flow do them well.
Yeah, I don't think they'll be selling cowl at any point. So anyway, it's just so because it's pretty diverse now. Operations is WA, New South Wales, Queensland, Canada, and life just becomes a bit complex when you got that. But the Sandvik Ground Support makes your life simpler. If you do become complex. This is Sandvik Ground Support's probably the only organisation that could you'd feel safe that they could service all those operations in all those jurisdictions.
Distribution in all of those jurisdictions, mate.
Yeah. Mate, you could start a friggin' mine in Mars and Sandvik could get the ground support over to you there.
Be that fast.
Yeah. Mate.
You chuck an order in there.
Yeah.
Faster than Amazon.
In a Sandvik rocket.
It's
Yeah.
That's probably why Red Lake made money this quarter.
I think we all talk about Neil Armstrong being the first person to walk on the moon, but I can see Derek Hurd being the first person to walk on the moon with a split set. That's probably what we're going to be talking about. That's what the kids are going to be talking about in a generation's time. So thank you, Sandvik, for making life simpler for everyone.
Before you go to the next Goldie, sorry, Matty, can I just throw in a deal proposition to Evolution? Surely they want to buy Rand and Tribune. I know that it's not possible to get a deal done with those guys, but
I thought you were going to say Ravenswood.
No. Maybe, but yeah, Rand and Tribune. Trading negative EV despite having retained economic interest in the Evolution mine with the amount of bullion they've got on hand. Surely Evos just want to wrap that up while it's where it is. But
might be easier said than done.
I doubt I'm the first person to suggest that, and I'm sure that they've
Don't
tried
sell
a lot.
yourself short, Trav.
But I imagine it's in terms of deals that are right up there on the shopping list for them. I reckon that's fucking as high as it gets.
There we go. Heard it here first, money miners. But this is another thing you're going to.
Maybe if they chuck a bit of copper in the vault, then Evolution will be all over them. What do you reckon?
Another thing you're going to hear first, money miners, today, Ora Banda made money.
There you go, mate.
And made a good chunk, mate.
Well done to them.
What a bloody bumper quarter. Good on them. Good on them. And as we said, starting to hopefully start backfilling some of this valuation because they're in the 80 odd cents today. They're fucking unbelievable bloody run. So, and look, it way exceeded my call of just what we're looking out for the quarterlies of some sort of neutral to free cash flow generation. They added 21.9 million to the balance sheet. So, look, the gold sold increased by 7,000 ounces, so selling 25,500 ounces at a gold price of $37.47. 24,000 ounces were mined from Riverina, with 17,500 ounces of that being from the stoping. So 73% of that came from stoping, which is pretty high, and because they did do a huge development quarter back in June, so that's where they punched a bit over 2,300 metres and 1,500 of that being operating. So that was a lot of the ore drives you'd assume. So that's obviously set this quarter up. So the development did drop off a bit this quarter, being a bit over 1,900 metres. So, but the capital development was 70 metres higher this month. So I'd anticipate that a heap of ore drives available in the June quarter, so punching them everywhere, which is more headings, which is flowed through to this really good result this quarter. So usually good development one quarter will see good stope in the next, and hopefully it's just trying to sustain that. The ounces they produced were actually at the bottom end of FY25 ounce guidance, which is 100 to 110,000. And I reckon that's a pretty good effort considering their guidance is a bit back end weighted with the Sandkin development ore coming on probably this quarter sometime, and then the stoping hopefully coming on March quarter. But they've actually got the guidance. They probably did have they had old the stockpiles to chuck through as well, but that's setting them up to because if they can keep that up at Riverina, they should be able to easily achieve their guidance, if not exceed it. But you got to leave a bit in the kitty for next year. You don't want to get too far ahead of that 110,000 ounces. That's just next year's target then, which is going to be higher anyway. So
what about on the cost front, mate?
Well, it's like obviously the all-in sustaining cost dropped considerably from 28.78 to 22.85. It's actually like the first quarter where there's no open pit mining line item on the cost. But they sold an extra 7,000 ounces. So hence all-in sustaining cost dropped $600 an ounce, as ounce is the denominator of that equation. So, and they still allocated their guided 22 mil a quarter on mine development, growth, capex, and exploration. A bit above that, they spent 23.3 million. So it doesn't look like they've held back any capex. But if you look at this quarter's waterfall chart in contrast to the previous one, it's been a pretty big quarter for them with Riverina stoping starting to produce the goods. So, hey, $1.5 billion market cap, probably a bit higher today. 22 mil free cash flow gives a yield of 5.8%. So not going too bad considering the growth ahead for FY26 looking to be 150,000 ounce producer at sub $2,000 all in sustaining. So one of the models has them generating about 50 mil free cash per quarter in FY26 when Sand King hits steady state. So that contained a gold price of $4,096 an ounce for that model. So gold price stays high and it gets going. It's setting up pretty bloody good. So good on to the team there.
It's good to see.
$4,000 is a hell of a gold price.
Yeah, that's what she is.
It's good to see. Good to see it making money, Matty. Would you be using your script if you were running Ora Banda to do deals right now?
No. Only based on the organic opportunity at that tenement, to be honest.
Wow.
I think.
I would.
What if it was a shit one?
A shit deal? Well, use your script when your market cap of all-time high. I think it'd be hard to go wrong buying undeveloped ounces here.
Are you going to be paying a bit for those undeveloped ounces at $4,000 an ounce?
Doesn't really. No, I think the relative value on
They just haven't run as hard, have they?
Not on the juniors, no.
Yeah, I think the relative value is pretty compelling if there's just something out there you want.
Something up.
Yeah.
But what would you pick up that would suit Ora Banda as an underground mining specialist? Because a lot of it out there is probably open pit.
Yeah, look, I'm not as familiar with all of the opportunities out there. There's some regional stuff that might be useful, some that might not be, or maybe you can go a bit further out and see opportunity somewhere else. But yeah.
I just look at them at I look at them at a contrast to Capricorn, where Capricorn have made themselves Capricorn off producing 100 to 120,000 ounces and generating free cash, and then they obviously got Mount Gibson in the pipeline, but they've kept themselves very simple as a cash flow generating business. And it appears Ora Banda could set themselves up to do the same, and they've got so much opportunity on their tenement to just continue at Davyhurst. So
yeah,
options could go either way, but either case is a positive.
Yeah.
If there is a Mount Gibson type thing out there, though, you'd be hunting for it. Yeah.
Yeah.
And that's a balance, like you say, Matty, of also giving your exploration team, giving your geos cash to fully study the tenements that you do have, because that should be the primary option. But it'd be mental not to look at the options out there with your paper worth what it is today.
And don't forget, if lithium bloody goes nuts again, they've still got the free carried interest for the West Farmers JV as well. So there is stuff in the pipeline that is diversified. So, yeah, don't know. I'll put my cock on the block. I don't see him doing a deal.
I reckon I'm
going to look like a dickhead. Luke, don't do a fucking deal.
I think that's always the default, right? Harder to do a deal than the opposite if you're going to choose one or the other.
Wow. I actually reckon...
I think it's too early. I think they need to prove it.
Yeah, I actually think that the large shareholder probably has more of a say in M&A than we think.
Yeah, exactly. Genesis ran out of time. I think they added 5 mil free cash for the quarter. Still doing their growth capex, commissioning of Laverton going on. So that's, I think, next quarter going to be interesting to see what dirt and whose dirt is going to go through that Mount Morgan's mill once that's fully up and going. 3 million tonne mill.
About Bellevue, mate.
Yeah. Bellevue probably had the quarter that everyone was expecting them to have after their sort of guidance update and reset. So a lot of green across the Goldies today. And Bellevue's up around 6% on the Spark chart. So no negative reactions thus far. So share price is actually slightly above their capital raise price now after they, did a good bit of time well below it. So produced nearly 36,000 ounces, so a bit under their bottom end of guidance range, which was just 41,000 ounces. But I think we all knew ahead of time that this was going to be the quarter where the focus was going to be on catching up and extending the infrastructure, the power, the pumping, and the vent to get the mine flowing a bit better. So they said it's going to be sort of heavily back end weighted this financial year, with the company forecasting in Q4 that they're going to pump out 50,000 ounces at that 200,000 ounce run rate, which was what everyone thought this was going to be at the start. So it says they generated free cash flow of 11 million, but there was after that an $11 million principal and interest debt repayment. So cash neutral. So, and $146 in the door after the capital raise. So it looks pretty positive on the development front. Like jumbo meters were up to nearly 3,600 meters for the quarter. They did add a 5th jumbo midway through the quarter for the Tribune portal, which that would have added some meters, but not sure if that jumbo was being utilised elsewhere in between portal or it just stayed at the portal, which probably did. But definitely a great quarter on the development front, that's for sure. Stope tonnes hauled also increased slightly, but you see the development ore tonnes increased by 20,000 tonnes. So a lot more positive on the, the total movement, the jumbo meters, and that's exactly where they need to be tracking. So grade hurt them this quarter. So mine grade was 4.5 grams and process grade was 4.8 versus their probable underground reserve, which includes high and low grade of 5. So a bit under, but you just got to look at the grade control results of Deakin Main and Southern Bellevue and that, and fuck, it's just some impressive intersections like that. The Deakin Main, it ain't really narrow vein looking at these intersections. Not sure on the true width, but most of the intersections above 5 meters thick and well above 20 grams a ton. So it's a freaking absolute honeypot, and it's bloody pretty impressive. And that thickness obviously helps so much in getting out the tons that they need. So it's just once that operation's in steady state and gets where it needs to be, you're talking about using your script and all that, but far out the focus, shifting a bit of the focus to the organic growth within that Bellevue tenement, to grow the tenement, you could create another friggin' Jundee or Telfer if there's more gold near that gold. Obviously the K-drill surface holes are the first step towards that, to doing that. Once
think you're onto something, mate.
Yeah, well, once the debt's sorted, once the cash is coming in, flicking a bit K-drill's way, the wise move is to make another friggin' Jundee or Telfer. Which shareholder wouldn't like that?
Yeah, you run out of stuff to mine if you're not putting holes in the ground, Matty.
Yeah, exactly. And like to put them in there, like, because the thing about Cadrell, like led by the sergeant, Ryan O'Sullivan, the sergeant for productivity and safety culture,
Yeah.
fucking unparalleled. Mate, the ex-underground experience of Drew Harvey, he knows what a surface gold intersection looks like in an underground environment because he's been down there.
Mm-hmm.
So, mate, forced to be reckoned with. Do what's right by your shareholders, any company out there. Make a Jundee or Telfer using Cadrell RC diamond holes.
Makes sense, Matty.
Makes sense. Everything I've said today makes sense, actually. I'm on fire.
What's the go with it? I thought I could be misremembering. I thought they raised money in that capital raise and they said they're going to pay down some debt with it. But they
hasn't happened yet.
Still,
so
end of
still got to
October.
get the mine. So that cash is sitting there. Still got to get the Macquarie to like approve the updated mine plan so they can.
Right.
That was the sort of the condition
Gotcha.
to actually do the early repayment of that,
Right.
approving the updated mine plan. So that'll be, I assume we'll see that this quarter sometime.
Yeah.
So you're getting a bit of interest out of it. Nothing wrong with a bit of interest.
JD, I've been we've both been sort of seeing the BHP Rio quarterlies come through. The theme across both of them has been, they're mining more of their lower grade stuff and maybe surprising the market as a result of that. What's going on here? Is there a change in strategy from the iron ore miners?
Mate, I think there might be. There was a few interesting sort of events coming out the back of BHP and Rio reporting. So Rio's now running this review of their sort of future product strategy, and Simon Trott is a Rio exec, the head of iron ore there, spoke about this at the Melbourne Mining Club. There's a few questions being tossed up on Friday. So I think it's pretty interesting. In a nutshell, to kind of summarize why I think it's interesting and why it's kind of worth talking about, mate, is I think it can ultimately spell bad news for the earnings of the majors, BHP, Rio, up in the Pilbara. So long story short, Rio have been producing more lower grade product. This is sort of becoming a bigger and bigger portion over recent quarters and years of their overall mix. And it's a sort of combination of a bunch of factors. You've got depletion of high grade resources, slower approval times. It's a pretty important one for the new mines they want to bring online. And it's also a lack of investment that happened a long time ago. So you can't underweight that one. But I think the analogy we gave the other day, we were speaking about in the office the other day, was that these things are like aircraft carriers. The decisions take a while and then they're kind of hard to stop. But what you're sort of seeing is the fruits of a decision that was made a number of years ago. And, Rio's the one I'm going to focus on today, but BHP is not immune from this challenge. And it's not really changing anytime soon. Rio said they're going to be producing more of this SP10 product, their lower grade product, for many years to come. That likely means lower price realizations to the sort of 62% index, and ultimately negative for earnings.
They normally, their flagship product is the Pilbara blend, and they famously sort of, mine a bunch of it, but then sort of, blend it near the port in the various stockpiles there. But like, why is this showing up now, JD?
Yeah, like I sort of said, Matt, I think it's a long time in the making, and the blending strategy is important, what you're kind of talking about. And I went down a bit of a rabbit hole. I found some interesting sort of presentations from 5 odd years ago where they kind of talk about this. But essentially all these miners, they blend their product. They want to get the iron ore grade right. They don't want to be sending out 63% one quarter, 61% the other. They want it nice and consistent for their customers. They want to control the impurities. They want to meet the demands of the steel mills. And they always want to be able to make the most of the assets that they've got. So they don't want to just not have to mine a mine because it's 59%, whatever. If you've got a bit of that and you've got higher and it sort of works with the impurities, you want to be able to blend it together and just produce that consistent product and make the most of the assets you've got, so you can obviously have the best cash flows. So like you said,
Yandy's the exception there for Rio. Yandy's its own little beast that doesn't go into the Pilbara blend, but I think the Japanese steel mills are more amenable to it. I forget the reason why, but I know that's sort of a standalone one that doesn't get blended.
Mate, I've got a wicked chart for you. I'll show you in a moment. It breaks out all the ones that Rio talk about. So Pilbara blend, like you said there, Trav, that's the go-to. That has been the benchmark for all Aussie iron ore miners for a couple decades now. 62% iron. It's a fines product, in demand because that grade and quality is good. It works for a lot of the steel mills out there, and you can sort of see in this 2019 slide from a Rio presentation that Pilbara blend sort of hits the sweet spot of what a lot of these mills want. That's both in iron content, impurities, and all those sorts of things. And then you've got the SP10. This is the one they're going to be churning out more and more of. Iron content closer to 60%, so it's a lower grade product, more impurities, e.g. you've got a bit more alumina in there. It's a bit of a newer product. They only started shipping and selling this one in 2014. And what they were targeting with here is the smaller steel mills in China. It's gone from like 6% of what Rio was shipping not that long ago to 20-ish% in the most recent results that we saw last week. And kind of interestingly, they didn't disclose the specific price they got for this. So I'll get into how these kind of spread in prices and how that all plays in. But what they've done recently with the SP10 is blend it with the Iron Ore Company of Canada product, which is a sort of 65% product, to get a bit of a mix depending on what their customers want. So Rio's got stuff from Canada, from Australia, and soon Guinea as well, which plays into this importantly. And they've blended at the mines, at the ports, and recently at this port in China. So that's on a relatively smaller scale, but I think that's going to get bigger and bigger as they send the stuff from Guinea to that port in China and blend it. And they also get a bit of third-party product if they need it. So like I said, they're going to spend a bit of while studying the implications of bringing the stuff from Simandou there and what that does for their overall sort of blend and product and what they have to negotiate with customers ultimately. So to bring it back to the question you put towards me first there, Trav, miners obviously always go for the highest grade, best dirt first. That makes perfect sense. Everyone understands that. Rio's been mining for over 50 years in the Pilbara. And if you don't have the mines to replace the depleting grades, your overall grade is obviously going to go down. So that kind of brings us into how Rio Tinto is going to address the challenge.
So onto the steel mills where this is going, JD, what effect does these different grades have?
That's a great question, man. We've sort of spoken about it with MinRes recently, talking about how their lower grade Onslow product is going to be blended. Like Bawu said, they're going to blend it with the stuff from Simandou and whether that's actually kind of viable. So this is pretty important because it changes through the cycle and it changes the relative demand of one product versus another. So lower product versus high product. And that can change pretty substantially. But at the end of the day, you've got steel mills who demand lower grade product when their margins are low, when they're not making much money. They're going to get the lowest grade product they sort of can within reason, within what their mills will take and all that, to reduce their costs and reduce production output. And then when they are making money, they want the highest grade product possible so that they can maximize their productivity. So when they're making money, you're going to see bigger spreads between the 58, the 62, and the 65% benchmarks, with a few caveats. There's a few obvious ones like value and use, super important. It's not just the grade, it's the impurities, all these things, how they go with the mill that you've got. But that's a rule of thumb to keep in mind. And one of the key reasons why that is, Maddie, is because it's not easy to switch off these blast furnaces. You can't just switch them off when you're not making a margin, flick them back on. So for a bit of context, I'll chuck up today's prices and you can see $101 for the 62%, $117 for the 65%, and $88 for the 58%. And this is on the back of last month. I think we saw on the FinDem report that 1% of Chinese steel mills are currently profitable.
Wow. That's the thing that, sends shivers down my spine a little bit. And Hugh Mackay talked about it, is if Chinese policymakers focus on improving the profitability of the steel mills as a measure to increase, consumer and investor sentiment, which is a big focus of theirs. How would you do that? Supply side policy would result in effectively there'd be a shutdown of some of the least profitable like steel mills and resulting in the ones that are remaining become profitable, but that's a policy which would massively reduce the demand for Australian iron ore in the process.
And
rapidly.
One way to make more profit, make the iron ore cheaper.
Well, the read through is particularly bad. What you get into there on the lower grade product, right? The MinRes are kind of elephant in the room there. When just as they need good cash flows as they're bringing Onslow online. So that is and I'll just chuck up a chart here so you can kind of see this sort of trend between the 58, 62 and 65 over time. Obviously there's other sort of factors at play, but you can sort of see how they've sort of trended over over a period of time there.
Wow.
So is that this lower grade stuff, JD, that doesn't sound like something you'd associate with a Rio Tinto or a BHP.
Yeah, I mean, loud and clear, they want tier one low cost operations. And I mean, this is a part of it, right? So we're not definitively saying that lower grade product is what they're going to be doing indefinitely. They need to get higher grade mines into operation, and they've been trying to do this for a number of years. So I'll rattle through a couple, but you've got Western Range, 80% complete now, coming online next year. That's a JV with Bellevue, 25 million tonne per annum capacity once it's fully ramped up. Rhodes Ridge, targeting 40 million tonne. This is a beast of a thing. That's a 50-50 JV with Right Prospecting. A number of years away though. But Rio said they're going to build a new mine in the Pilbara every year for the rest of the decade. You got West Angelas, Hope Downs, Brockman 4, just to name a couple of them. Ultimately, by 2028, they're talking about bringing 120 million tonne per annum online while seeing a depletion of 19 million tonnes there. So bit one way, bit the other, but overall more coming online and should see them balance out in time and help them continue to produce that Pilbara blend. But there could be, like I said earlier, a few years of lower sort of product coming out. Overseas, you've of course got Simandou as well, on track to come on next year to be just 5 million tonnes next year, 75 million tonnes in 26, going to 120, 27 million tonnes per annum rather, is Rio's share of that one. And of course, that's a higher grade product. That's why they're studying blending that one at the ports with the lower grade stuff. And that's going to be
27, JD. Is that 27 of the 120 or 27 of the 75?
Yeah, that's right.
Yeah.
So the way people talk about Simandou is two 60 million tonne per annum mines, and what's Rio got? I think they've got like a 47-ish% interest in one of those. Yeah.
Who's got
exactly.
the other ones?
So one of them's part of this winning consortium, and the other one is almost entirely Chinese consortium of various companies there. Yeah. None of them is just outright owned. It's a whole bunch of companies that have interests.
Yeah, right.
So the other factor in this sort of becoming the new norm is approval delays. And I feel like we're talking about it every other week, but it's just so common. Getting mines online is super hard work. And we saw Rio speak out, which is something they've, been a bit cagey with, since Juukan Gorge, but they've sort of spoken out to the government and told them to think practically about environmental law reforms. And actually that they won a few plaudits from various conservation and environmental groups from the way they sort of approach this, but it's not just Rio thinking this. They at the end of the day want less sort of duplication between state and federal laws and less complexity overall, and that'll sort of help them streamline getting those mines online that they want.
Yeah, right. So the Simandou, the Pilbara Killer, and all this low grade stuff, what's it mean for the other iron ore players, Mr. Dorling?
I think the thing that kind of rings through reading all this is that just grade really, really matters. I think there's not an awful lot that BHP or Rio can do that they're not already doing. They're working hard, but there's something I just keep thinking about in all this. And it came up with our chat with Aluminium Hour just the other day, and it's come up a few times, this sort of topic of commodities being fungible. And, you need to do a heap of work to make them fungible, right? Every iron ore mine's got different sort of characteristics, and a heap of work needs to go into it. And it's got a lot of ramifications on the price realization when you're talking about iron ore that you get. Another thing I've kind of been thinking about is this kind of delicate game that some of these big producers, I don't know if they're thinking about, well, I'm sure they're thinking about, I'm not sure how much they can do about it, but they want to produce as much as they possibly can without pushing off that higher cost shelf that we talk about being like 180 million tons per annum that sort of sits between $80 and $100 to produce that ton. And it's a kind of delicate act. I'm sure they're thinking about it heaps, and every now and then they share a bit of their research. But yeah, I think it's a bit of a balancing act for what they do going forward. And I'm keen to keep following that and sort of seeing the research and the words that come out of the mouths of these majors on that one.
That iron ore cost curve you're showing here, that's just so fascinating, isn't it? Just showing how much iron ore is produced by the majors at a low cost, and then just that rapid bloody fourth quartile bloody lift.
You could barely draw a more perfect cost curve if you're sitting in that. If you're sitting in Q1 there.
Oh, God, you'd take Q3. God.
You would for a while. Yeah,
very, very good. Oh, but speaking of that aluminium al chat, if anyone hasn't listened to it, far out, just did a good job there. You know what, bloody the bit I loved, and it's pertinent to Rio. Pertinent, I said it. Sorry, everyone. When you prompted the Alcan question about, and the comments about, and Al's comment of saying it might have been the poison pill that Rio swallowed to defend themselves from BHP taking them out like that. Fuck, that was fascinating. That was so cool. Interesting. That was a bloody good yarn.
Oh, mate. 30 years of history.
All credit to Al.
Yeah.
That was wicked.
Could speak to him for 5 hours, I reckon. Maybe longer.
Easy.
Yeah.
Do a Joe Rogan length, buddy.
Get on the mushies. That'd be the go. Oh, very good, boys. Sensational. I could talk to the founders of MMS for 5 hours easily.
I could do that
without a beer. I love them.
Yeah,
love them. You could have them for 5 years moving your open pit dirt if you're smart. Give them a buzz, mate. All our other bloody partners that I could talk to, friggin' talk the leg off a chair with. Grounded Construction Group. How good are they? The Sicilian god himself. CrossBoundary Energy, Sandvik Ground Support, CRE Insurance, Greenlands Equipment, Co-Drill, MMTS, Australian Earthworks and Haulage, and our great bloody friends at Spark.
Hootaroo, lads.
Hootaroo, money miners.
The information contained in this episode of Money of Mine is of general nature only and does not take into account the objectives, financial situation or needs of any particular person. Before making any investment decision, you should consult with your financial advisor and consider how appropriate the advice is to your objectives, financial situation and needs.